Hi, you're welcome to this episode in accounting. The topic we'll be looking at today is the bank reconciliation. Bank reconciliation is one of the controlling measures a business takes. Basically, it's a form of internal control over cash that explains the difference between the balance of a checking account according to the deposit or records and the balance reported on the bank statement. That is a definition in the Fundamental Accounting Principles Textbook, Volume 1, 17th Canadian edition. The topic that covers this in this textbook is Chapter 7, Internal Control and Cash. Page 532. The subheading bank reconciliation section is there. So it's defined as, again, reconciliation, a form of internal control over cash that explains the difference between cash book balance and bank statement balance. That's the adjustment I've put to it. So in summary, a bank reconciliation is prepared such that the difference between the cash book balance would be adjusted to reconcile with the difference with the balance of bank with the bank balance. Rarely will you have bank balance being equal to the cash book balance. It is rarely the case, and in most cases that this happens, you have to find a statement that will show the reconciliation between the cash book balance and the bank statement balance. The reason this has to happen is because the bank reconciliation must be prepared to show clean hands technically. There are errors or there are causes of disagreements between cash book balance and bank statement balance, and you have to look at those causes and take care of them in order to make the two balances to agree. Let me explain the some causes of disagreements between cash book balance and bank statement balance. One of the causes is bank charges. In a period, usually a month, every month, or the period in consideration, when bank charges a business bank's account, it would show in the bank statement, but it will not show in the business cash book. So it is one of the causes. Another is direct transfers. Direct transfers from or to the bank would show in the bank statement, but will not show in the cash book. Unpresented check and uncredited checks. Unpresented checks are checks that have been issued to suppliers of an organization but have not yet been presented for different reasons, for not being unavailable, or for any reason the supplier you've issued the checks to may not take the checks to the bank. And usually if you give the checks towards the end of a month, for instance, the suppliers may not take it to the bank to cash it, to credit it to their own accounts till the end of that month, which means when bank statement is prepared or issued to you, that check issued would not be shown. Another is the uncredited check. Uncredited checks are deposits that the business has made, the lodgements that have been made, the check lodgements that have been made by the business. But for processing and confirmation, interbank confirmations that may happen, it may take a day, 2 days, or sometime a week. And if the time the bank is processing the check takes few days and it takes you to the new month, the bank statement will not show it in the month you lodged the check, but the month you lodged the check it will appear in the cash book. Let me break it down to make it easier. You lodged the check on the 28th of a month. Let's assume that 28th is happen to be a Friday, and that month ends on the 30th. That means that month would end on Sunday Now, the bank processes the check on Monday, following Monday, which is the first of the new month, which means the bank statement for that month that ends on Sunday would not reflect that lodgement, whereas your cash book will reflect it because you made the lodgement on the 28th. That money entered your account technically on the 28th, but the bank did not process it till first of the following month. So it will not show in the current month's cash book, sorry, in the current month's bank statement, but it will show in the current month's cash book. These are some causes of disagreements between the cash book balance and the bank statement balance. Now, one step to take is to correct or update the cash book with items missing in the cash book. First, the item, you look at the debit side of cash book, or the left side of the cash book, is compared with the credit side of bank statement. How is this so? The debit side of cash book shows receipts, cash that is received, or lodgements in the cash book, whereas in the bank, money that enters bank is taken as a credit because it is not bank's money, so it is taken as a liability on part of the bank. So the bank will credit it for you, the cash book will debit it. So now you look at the debit side of your cash book for entries in the bank statement in the credit side. So if any item is in the credit side of bank statement but is not in the cash book, you update the cash book with that entry. Entries like credit transfers. There were some transfers to your bank accounts and it appears in your bank statement, but it is not yet in the debit of cash book, so you put it there. Then you look at the debit side of bank statement. Each items in the debit side of bank statements are usually withdrawals or payments. So when an entry is made to withdraw money from the bank, it should appear in the debit side of bank or withdraw side of bank statement and appear in the credit side of cash book. Now, cash book, if those entries appear in the debit side of bank statement and do not appear in the credit side of cash book, you put them there. Entries like bank charges would appear in the debit side of bank statement, but will be missing in the cash book credit side. You put it there. Standing order would also be there, or pre-authorized payments. For instance, when it appears in the cash book or in the bank statement but not yet in the debit side of cash book, you update the cash book so that you can have the updated balance in the cash book. This is updating the cash book or adjusting the cash book. The second thing you would do is to now update the bank statement with entries that appeared in the cash book but are currently missing in the bank statement. Remember, first thing we did was to update the cash book with entries that are in the bank statement but are missing in the cash book. We update the cash book. Now, some entries are actually in the cash book but are missing in the bank statement. Now, those entries you have to correct, you have to update or reconcile the bank statement. So first thing, you look at the debit side of cash book. Remember I said earlier, the debit side of cash book shows receipts and lodgements, cash receipts, cash lodged. So now as they are lodged, including checks that are lodged, now those checks, when they are lodged, the day or the month they are lodged, let's put the month, let's just pick April of the year. You lodged money in your bank, in the business bank account on the 28th of April, for instance. It can be 26, it can be any date, but usually later days of the month. Checks may be delayed till and processed in the next few days that happen to be the first few days of May. So April 28th, you lodged money in the bank, it will appear in the debit side of cash book. But if bank has not processed it, it might be because for any reason bank may be confirming that transaction, confirming the that check. So the check was not processed till the following month, but it has appeared in the cash book debit side. That is an uncredited check. It is a check that has not been credited to your bank account, but it is debited in your account. So it's uncredited check. Checks that have been lodged but not yet processed by the bank or not yet credited to your bank account. So you would okay, if you are starting with balance, you start with balance of bank statement. So that money has been lodged, but it hasn't been processed. So you add it to balance of bank statement. Then the unpresented checks are checks that you have issued out. You've paid out to your suppliers, so it has appeared or they have appeared in the credit side of cash book because they are payments. Credit side of cash book are payments that reduce the money you have, the cash you have. Now, since those payments have been made through issuance of check, so you now take bank statement. Those creditors have, for any reason known to those creditors or suppliers, they've not taken the checks to the bank. So that means they are unpresented checks. So unpresented checks you now deduct because those should have been deducted from your bank balance. Though they have not been taken to the bank by those suppliers, but because of your reconciliation, you deduct that. The third thing you do, and the third and final thing you do, is the bank error. There might be bank errors sometimes. Not common, but should it happen, you have to correct it. Example of bank errors would be inter transfers. A customer with similar name might have sent money to your bank account mistakenly, or your account might have been deducted mistakenly by the bank. This doesn't happen regularly, but if it happens, if the bank has credited money to your bank account mistakenly, it will be deducted in the reconciliation. And if the bank had deducted money, if your bank balance had been deducted mistakenly for any reason, then it will be credited back. It will be added back, I mean. So that means if the bank error meant that money was taken away from your bank account mistakenly or for any reason, it will be added back to correct that mistake in the reconciliation. And if money was credited to the business bank account, it will be deducted. Now, the amount you're going to have after adding uncredited check to the bank statement balance and deducting unpresented check to the bank statement balance and adding or deducting bank error depending on which error happened, the answer you're going to get would be the balance of adjusted cash book. This is the point I would conclude this episode on bank reconciliation. This is in chapter 7, internal control and cash of fundamental accounting principles. Fundamental accounting principles, you may make reference to that. Thank you very much. If you have any question, you may put it in the comment. The question will be responded to accordingly. Thank you and see you in the next episode. Bye.